Can this rally continue? Let's speak with Dan Rohinton. He's portfolio manager at IA Global Asset Management. Dan, thanks for coming in. What do you think of today's market reaction? We are still really in the thick of this tariff situation.
Yeah, it's really too early to come to conclusions because after you have basically 2.5 days of some of the most violent down moves that we've seen since the great financial crisis and also the early days of COVID, a relief rally is inevitable. So we were in the most oversold market we've had in history, after Friday being the heaviest trading day in stock market history. So a bounce is reasonable, and there's also, to take a step further, there are somewhat constructive signs that this isn't the rhetoric can be softened at the margin, so that the news that they're talking with South Korea, the news that they're talking with Japan, the news that they're talking with Taiwan is helping to calm the jittery nerves. And one last piece, if I may add, it's not about where the direction of travel is, it's about having clarity on the path. Mm-hmm. So more clarity is constructive in its own right.
Yeah, we're a long way, would you agree, from clarity on the tariff front?
We've gone from massive uncertainty to incremental clarity. Mm-hmm. So there's room for significant improvement in understanding what the actual grand strategy of this is, but we are getting a few tea leaves to say it's not as rhetorically extreme as we had on Thursday.
What are those tea leaves? What are those signs of incremental clarity?
So this morning we had news that Japan and Korea are working towards a deal with the United States, early stages, alongside Taiwan, I believe, as well, to basically invest in Alaska to help basically have an energy corridor from an energy-rich state in the United States with energy-hungry nations, which are in the first island chain of the Asia Pacific. So those are just areas where you can see that it's not just purely about autarkic and mercantilist behavior, which is what it was perceived on Thursday, to maybe there's some bigger goals at play, and we're just starting to see what those could be.
Okay. What kind of questions are your clients asking during this period, and what kind of answers are you providing?
Well, I think it's really what are we doing, how are we managing the portfolios, what are some of the downstream effects? And I think it's important to say there's a lot of unknowns here. We're just starting to get a little bit more knowledgeable about what's going on. And what we do in those environments is we minimize leverage and we minimize companies that don't have pricing power. So if you don't have pricing power, you can't really push through any cost pressure that you'll see in your ecosystem. Mm-hmm. Second, leverage just magnifies the first point. So if you have leverage...
Corporate debt is what you're talking about.
Corporate debt, that is.
Right.
So if you're highly indebted, your customers will say, well, if you don't give me a concession here, sorry, there's a credit issue for you. So credit is going to magnify to the upside and to the downside the winners and the losers through this period of turbulence.
Are you buying now?
We have been, yes.
Mm-hmm. What kind of stocks have you been buying? I know we're going to talk about specific stocks in our next conversation, but what kind of sectors are you looking for, and what kind of attributes in a stock are you looking for?
Yeah, so it's really pricing power and leverage are our guiding North Stars, but within that, there's also some things we can do at the margin, so call it making a like-for-like swap in the portfolio. So if we see the opportunity that we see more trade down happening in the U.S. consumer and the global consumer, then going away from the discretionary companies that are more hotel and the travel far away to ordering pizza at home trade, that's the down trading that we have been doing in the portfolio, but that's more neutral within the same sector. But as a whole, I think technology is getting more attractive because it was the first down the pipe when it came to the sell-off. Because 10,000 years ago, Paul, which was 2 weeks ago, tech was going through a pretty draconian sell-off. And it's now starting to hold in better and reallocate faster. So we're reallocating faster into tech versus what we were doing before.
We're just on the cusp of earnings season in the U.S. It kicks off on Friday with the banks. I've talked about this with an earlier guest, but I'd love to get your views as well. What would you expect to hear CEOs of major corporations say about the tariff policy through the course of earnings season?
I think the universal answer is going to be we don't know. And we're going to take the glass half empty approach to our guidance. So expect a more conservative level of guidance that's put forward by management teams. Because what's the upside in saying everything's probably going to be fine?
Right.
We're going to wait 6 months and everything's going to be okay. So they will take the glass half empty approach if they're a prudent management team, and I expect most will.
Do you expect criticism of the policy from the? Do you expect the comment to be made this is poor economic policy?
I think the criticism will come from behind closed doors because it doesn't serve any corporation to publicly criticize what is potentially national strategy and industrial policy.
That's Dan Rohinton. We will take a break and stick around with Dan after this. He'll share some of his top stock picks right after this.